How the Fed proceeds is, for me, really interesting. Will they remain dovish, or will they suddenly become hawkish and try to get some interest rate hikes in next year? Kallum Pickering, Berenberg Bank. Well, Mario Draghi stressed at yesterday's meeting that he and the ECB are ready, willing and able to act, though the market reaction appears to have been resolutely inactive since. What then is your assessment of this declaration?
What the ECB didn't do yesterday, what the markets were looking for, is advance on the forward guidance that they had given prior to the Brexit vote. There is some potential shock from Brexit due to heightened uncertainty on the Eurozone economy. Markets were probably looking for some additional dovishness from Mario Draghi just to try and offset that. He didn't say that. What he said was the ECB would be data dependent. If economic data in the Eurozone showed that Brexit had generated a large shock, then the ECB would probably respond. My best guess is we'll see a small dent to Eurozone growth in the second half of the year, maybe even a modest dent to, say, half-trend growth. The ECB won't react to that. They've already got lots of stimulus in the pipeline through the aggressive QE program and negative rates, and the internal politics, mainly stemming from the hawkish Bundesbank, will prevent the ECB ratcheting up stimulus just because of the Brexit vote. More likely than not, if they do extend, it will be to lengthen the QE program beyond March 2017.
Okay, so as expected, the UK's vote to leave the EU is something which the ECB will monitor closely, with Draghi commenting that a clearer picture will be required before any fresh stimulus is to be imposed. Are you expecting any kind of Brexit backlash for the ECB in the near term?
If the ECB did need to react, if, say, we saw financial contagion risks across Europe, and by that I mean markets begin to price in a potential exit from the EU by Italy, then the ECB would act. We'd probably see the ECB reacting to widening sovereign spreads. By that I mean borrowing costs for the peripheral economies that could potentially leave increasing relative to German spreads. That's sort of the euro crisis that we saw in 2012. If that happened, the ECB would step in. But I don't think that will happen. That was the immediate risk. Now that seems to have passed. The contagion risk seems to be low. The ECB will remain vigilant, but I think it's unlikely that they'll have to respond.
And lastly, shares in Asia were down today after the perceived inaction of the ECB. Would you expect the ECB's stance to be reflected in how the Bank of Japan and Federal Reserve act next week?
For the Federal Reserve, their main concern will be financial market volatility. The US economy is doing reasonably well. It's accelerating from the slump that we saw in Q1. Employment gains have strengthened again. The Federal Reserve could, for the sake of the US domestic economy, raise interest rates. The reason that they'll hang off is because the Fed is concerned about financial market volatility. The potential for market volatility after Brexit is fairly high. The Fed certainly won't want to add to that, so my best guess is they'll try to push back market expectations until December, just so that markets aren't having to price in another risk. The question for the Fed is what happens at the end of the year when they've met their dual mandate. By that I mean inflation will probably be 2% and unemployment will be roughly in line with long-term average rate, which is about 5%. So at full employment and the inflation target, that would suggest the Fed has to hike rates. How they then proceed is, for me, really interesting. Will they remain dovish, or will they suddenly become hawkish and try to get some interest rate hikes in early next year? On the Bank of Japan, I don't think they will be too concerned about Brexit. What the Bank of Japan seems to be coming to terms with is the fact that aggressive monetary policy is not the solution to the Japanese economy's secular problems. So by that I mean low trend growth, low inflation. The structural reforms in Japan are needed to raise trend growth and raise inflation. So the backtracking that we've seen from the Bank of Japan just this week, we had comments that they would not go ahead with helicopter money, which has been speculated, suggests that now they're trying to retreat somewhat from aggressive monetary policy to put more pressure onto politicians to do the necessary supply side reforms.
Thank you, Kallum. Be sure to check back on Monday for the week ahead with Celeste Skinner. See you next time.